What's up, traders? So today I'm going to tell you about two different companies that I just started trading and investing in. And both of these companies were said to be taken over by new technologies. However, they have both used these technologies to grow their business even more. And I think this is the perfect opportunity. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I use the money that I print from the market in order to pay for my entire lifestyle. And speaking of lifestyle, during my last video, I shared a scripture that pertained to the information that I was discussing in the video. And if you're familiar with the channel, you know that I'm a God-fearing man and that I share scriptures in my videos every now and then. However, I had a comment that said, you should share a scripture for every video. And I started to think about it, and I was like, well, that makes sense, because if I'm putting God first in my life, then why not put him first in my videos as well? And so moving forward, I'm going to try to share at least one scripture per video that pertains to money and building wealth and business. Because one thing is for sure, if you read the scriptures, you know that God did not intend for us to be broke. So let's get to it. All right, Proverbs 13:11. Wealth gained hastily will dwindle, but whoever gathers little by little will increase it. And to put it into layman's terms, just stack your money up consistently and reliably, and over time you will build wealth. But if you try to go out and hit the lottery, there is a good chance that you will lose it, just as this says. And speaking of the lottery, I believe there is a statistic that shows that most people actually lose the funds within a certain amount of years. And the reason for that is after we make a big win or after we get a huge amount of money for a specific reason, there are chemicals released in our brain that just make us feel good. And so what we end up doing is trying to chase that exact same feeling again, which causes us to want to do the exact same thing that got us the money in the first try. And it's for that exact reason that most option buyers are not successful. All right, one, because most option buyers don't do it right to begin with. And then secondly, when they do get a win, they think that they'll have that exact same luck again. And so they try it over and over and over and over again, and they just end up losing more money over time. And that personally is why I love option selling and why I developed the strategy that I use in the Trader Freedom community. The way I trade, I don't need a specific stock to skyrocket for me to make money, right? I don't need to buy calls on Nvidia and hope and pray that it goes up just for me to have a winning trade. I know exactly how much money I'm going to make this month. I know exactly how much money I'm going to make next month, and I know how much money I'm going to make the month after that. I like to focus on consistent and reliable income strategies that are very repeatable and that people could utilize in order to either supplement their 9-to-5 income or absolutely totally replace it. And that is what we focus on in the Trader Freedom community. And speaking of the community, you know, I always have to shout out some of our members. So shout out to Terrence. He says closed $372 in trades today, up $2,200 month to date. That is for July. And he showed the screenshot there. And so he is absolutely using the market as his personal money printer. And then we have Hector here. He says closed $585 in trades today, 360 from Amazon puts, $225 0 DTE SPX puts. He says in short summary, Amazon took me 2 weeks to juice that $360. 0 DTE on SPX juiced $225 in a single day. The best part of this is that as soon as I closed the Amazon trade, I opened the 0 DTE trade using the same collateral. Overall, 0 DTE definitely pays out. The way Rashad utilizes credit spreads is pure genius. I used to play 0 DTE calls and puts, and it was so hard to keep my profits. With Rashad's method, I'm finally able to lock in my profits and keep it pushing. The subscription pays for itself. The community is amazing and helpful. I've been subbed for 2 months and it's been great. You literally have nothing to lose and everything to gain. 4% monthly gains is easily achieved with Rashad. And so Hector, congrats to you. I know you just joined the community just earlier this month. You are doing amazing. But one thing I do got to say, man, dude, if you don't go charge your phone, why is it on 1%? And last but not least, we have a very new member, Terrence, who says, what's up, Freedom fam? I made my very first options trade today. I copied 2 of Rashad's 0 DT trades and made a whopping $85. Thanks for showing me the way, sir. I would also like to send a shout out to my newfound family member, Rudy, for reaching out, having a conversation, and encouraging me to pull the trigger. I'm taking baby steps, but I feel like they are steps in the right direction. And so that's super awesome. And that's the one thing I really love about our community is because we are actually a community and we actually look after each other. And that's exactly how I want it. I don't want people just learning from me. I want everybody to learn from everybody because there's something that you can learn from anybody. But if you're interested in joining a very cool community, come join us in Trader Freedom. The link is below in the description. You'll get my trades as soon as I enter them. You'll get my full options framework via the Trader Freedom course. You can ask me questions at any given time. And lastly, you'll be within a community of other people who have the exact same goal as you. So if that interests you, the link is in the description below. But let's get down to business. And the first stock we're going to discuss is Uber, ticker symbol UBER. Now, we're all familiar with Uber and the type of business that they have. But over the last, I would say, year and a half to maybe 2 years, the thought was that autonomous vehicles could probably kill Uber's business model. And because of that, we saw that every time that Tesla stock would go up from mentioning their robo-taxi, Uber would go down the exact same day. And what I love about Uber's management is they are not just sitting on their morals. They said, this is not going to destroy our business, and we are going to get a slice of this pie too. And so one of the first things that the CEO of Uber did was they reached out to Elon and said, hey, let's go ahead and create a partnership. We would love to have your robo-taxi on the Uber platform. And Elon came back like, nah, I'm good, bruh. Now, the Uber CEO could have just taken defeat right then and there. But he said, nope, let the battles begin. And so not only did they recently partner with the current leading autonomous vehicle company Waymo, which is owned by Google, but Uber is also making huge investments into autonomous vehicles themselves. And so we have this article here that says Uber to invest hundreds of millions of dollars in Lucid and Nuro in massive robo-taxi deal. And we can see it says the companies plan to launch 20,000 robo-taxis in the US over the next 6 years, starting with the first city next year in 2026. And so they are getting their slice of the pie too. And what I like about this from a business aspect, well, of course, they are making huge investments, so this will impact their free cash flow in the near-term future. However, once this actually gets going, well, one of Uber's highest expenses are the expenses that they pay their employees / the people that drive you around. And so once that expense is minimized, I can see their free cash flow and their net income growing rapidly. So now that we know that, let's take a look at a few more data points. Now, this here was Uber's most recent earnings announcement, and so we just discussed some future plans, but let's look at how the company is doing fundamentally right here, right now, because as you know, I care most about the fundamentals of the company, as the fundamentals tell you what company to buy, and technicals tell you when to buy. So looking here, during their announcement, they said gross bookings grew 14% year over year and 18% year over year on a constant currency basis. Income from operations of 1.2 billion, adjusted EBITDA of 1.9 billion, and that is up 35% year over year. And the CEO said we kicked off the year with yet another quarter of profitable growth at scale, with trips up 18% and even stronger user retention. Supported by the consistent strength of our core business, we continue to build towards the future, including 5 new autonomous vehicle announcements in just the last week. We delivered over $2 billion of quarterly free cash flow with multiple levers in our control to generate industry-leading cash flow growth. We remain focused on disciplined capital allocation to drive greater financial durability and are on track to deliver against our multi-year plan. All right, so in total for the first quarter of 2025, they did 14% revenue growth. Their net income from operations was up 1.2 billion, which is up 1.1 billion from the year ago quarter, and adjusted EBITDA grew 35% year over year. And then they gave their forecast for the next quarter, which would be the quarter that we are in currently. And they said gross bookings of 45.75 billion to 47.25 billion, representing 16 to 20% growth year over year, and adjusted EBITDA of around 2 billion, which represents 29 to 35% year over year growth. All right, and so their fundamentals are obviously heading in the correct direction, but now let's look at some more information that we would need to place a potential trade. Now, another thing that I want to point out is Uber's PE. It is very, very low and not overly priced like a lot of stocks in the market currently. And so since it's already valued at a good price and they are growing the revenue and net income very rapidly and very aggressively, I think I want to sell puts on this company. And by selling puts, I am just agreeing to buy shares of the company at a cheaper price if the stock price drops. And for doing so, I will get paid to wait around. But more on that later. Let's go ahead and take a look at the charts. All right, so here we are looking at the chart for Uber, and these are daily candlesticks. But one thing that I want to point out is that it's currently trading at the bottom of its trading range. So if you take a look at these black lines, these are the Bollinger Bands, and the Bollinger Band just aims to show you the range that a stock is expected to trade within. All right, so the middle line is the 20-day moving average, and then the top line is 2 standard deviations above it, and the bottom line is 2 standard deviations below it. And we can see that it is definitely trading at the bottom of that range. And when it's trading at the bottom of the range, I like to be even more aggressive with my contract size than if it were trading, let's say, at the top of the range. All right, and then I do want to point out another thing. This purple line is the 50-day moving average, and we can see it is set at $88 currently. And so that may act as another point of support, but we will keep that $88 value in mind. Now let's look at the next data point. Now looking at analyst ratings, they all currently have it as a strong buy, and there are currently 47 different analysts who are covering this stock. And as far as their target prices go, they have it as a mean target of $100. All right, and this is the one that I pay attention to the most. We can see they have a high target of 120 and a low target of 68, but the mean target is what I pay more attention to, and I love it when the stock price that it currently is trading under what that mean target is. And so analysts absolutely see more upside from here. But now let's go take a look at the expected move. So now we're looking at the expected move. And the next thing I need to do is select the expiration date that I want to use. And I always go within 45 days. However, let's assume that we are focused on getting that monthly income. And so I'm going to select this date that is 28 days out from now. And we can see that the expected move is about 8.21% either way. All right, so that's 8.21% upward move or 8.21% downward move. But as of right now, the option market currently has priced in up to 8.21% move in either direction. And so that would put us at a lower price of $83. All right, and so we'll keep that data point in mind as well as we go into our brokerage and place a trade. And if you want an absolutely free 30-day trial to this website and look at all the data points that I look at, plus many more, the link is below in the description. Go ahead, take it out, and take advantage of the free 30 days. But now let's go ahead into our brokerage and look at a potential trade with the information that we now have. All right, so now we are in the Moomoo platform. Shout out to Moomoo because if you open an account and fund it, you can get up to 60 free stocks currently. All right, so you can go ahead and click the link below in the description to get that deal. You can absolutely take advantage of that. You don't even need to place a single trade or invest into anything. You just need to open an account and put some money in it, and you can get up to 60 free stocks. So make sure you utilize that. The link is below in the description. And so we're about to go ahead and look at Uber's options chain, but do remember that this is not a recommendation to buy, sell, or hold any stocks or equities or options contracts of any sort. But I'll come up here and I'll select Uber. And now we just need to simply select our expiration date. And so we said we were going to do this date that is 28 days out from now. So I'll go ahead and click that. So remember, the data told us that the expected move would be around $83 on the low end, but that the stock had a lot of support at $88 because that's where the 50-day moving average was. And so with that information, I would probably want to open up either this $82.50 strike or the $85 strike. And all we're doing by selling puts is agreeing to buy the shares of the company if the stock price were to drop below our strike price by the expiration date. And every contract is worth 100 shares, and so you would be forced to buy 100 shares if it were to drop. However, since we like this company, then I would absolutely be fine with buying the shares of the company at the strike price that I personally selected. All right, so on one hand, you either get paid just to wait around, or two, you get paid to wait around and collect shares of a stock that you really like, that you believe is going to grow in the future. And to me, that is absolutely just a win-win. And so from here, it's just really how aggressive you're feeling. We can see that the $85 strike will pay anywhere between $215 to $220, and the $82.50 strike will pay anywhere between $146 to $150 currently. Now, I can tell you one thing, that us in the Trader Freedom community, we've already placed a trade for this days ago, and we traded the $82.50 strike. So shout out to everybody who is already within the trade and already collecting money on that. However, if I were to open up a trade today, then again, I would probably either do the $82.50 strike again, or I would do the $85 strike. But since I personally already have an $82.50 strike open, I'm just going to go ahead here to the $85 strike, and I'll select that. And from here, you could just select however many contracts you would like to do. But we can see we will collect about $218 per contract. And again, we are just agreeing to buy the shares if it drops below $85. However, what if you don't want to buy the shares, or you have a very small account and you could not afford to buy 100 shares of the company per contract? Well, you could just easily come over here and turn this into a credit spread. And so an example would be, since we're selling to open the $85 put, then maybe we buy to open the $80 put. So I'll come up here and I'll select this. And now the only money needed in order to do a credit spread will always be the distance between the strikes times 100 minus the premium that you received. And so in this case, we sold to open the $85 strike, and then we bought to open the $80 strike. So that is a difference of $5. And then we'll times that by 100, that'll get us 500. And then we received what looks like right now $117 for opening up this trade. And so our max loss would be technically $383, which we can see here. And so because that is our max loss, that is technically all we need in order to put on this trade, which would be $383. And so that is a way you can switch things up if you do have a smaller account. And so that is Uber, but now let's head on to the second stock. And our second stock is Adobe, ticker symbol ADBE. Now, if you're not familiar with Adobe, they created software such as Photoshop, Lightroom, and Adobe Premiere Pro. Now, I may be a little biased to this company because I've used at least one of their products pretty much every single day for over the last 10 years. All right. I own a photography company and we have been in business for a very long time. And so I use their products like Lightroom and Photoshop every single day for over the last 10 years. And now that I'm making videos for you guys, I also use Adobe Premiere Pro every single time that I make a video. And I absolutely love their products. But they've been seeing a lot of headwinds recently because for some reason it's assumed that AI will destroy their business. And not only do I think that that is incredibly false, but the numbers also show that that is false as well. And as far as the AI aspects of it, what people are forgetting is that people use Adobe's products to edit videos, not really to create videos. And while you can absolutely use AI now to create different videos with different prompts, when it comes to editing a video that you already have, it's not quite there yet. And on top of that, just like Uber's not sitting on their morals, Adobe is not either. They are using AI to make their products even better. And they also have a platform called Firefly that uses AI that has been doing so good that other AI companies have reached out to partner with Adobe on Firefly. And so not only do I not believe that AI will kill Adobe's business, but I think that AI will actually help it. But let's go ahead and look at their latest earnings results. All right, so for second quarter fiscal year 2025, Adobe achieved record revenue of $5.87 billion in its second quarter. Now, we can pause right there. AI has been out for a few years now. And so I believe that if AI were to begin destroying Adobe's business like they've been saying for quite some time now, that we would at least start to see some effects of it. But it seems like every single quarter that Adobe has, it's a record quarter for them. And so how could their business be dying if their money is going up? And it's just like the example that I always use with Facebook. But in 2022, Facebook was aggressively selling off because everybody was saying that TikTok was going to kill Instagram and Facebook. However, I kept looking at the numbers and I saw that quarter after quarter after quarter, their business was becoming better and better and better. And so I'm like, how can this be a dying business if both their revenue and income is growing pretty much every single quarter? That doesn't make sense. And so at that time, I continued to buy Facebook, which is now Meta, over and over again, and I made it my largest position. And that obviously turned out very well. And I believe that Adobe could be that next opportunity. And we can see that the CEO said here, as a result of us driving strong performance in the first half of the year, we are pleased to raise Adobe's fiscal year 25 total revenues and EPS targets. So not only are they doing record revenue and earnings right now, but now they believe in the future they will do even more than what they thought they would do previously. All right, we continue to invest in AI innovation across our customer groups to enhance value realization and expand the universe of customers we serve. All right, so with that information, let's go ahead and look at some other data points. And just to piggyback off the information that we just looked at, these are Adobe's financials over the last 5 years. So you can see that they went from $12 billion per year to doing $21.5 billion now. And ChatGPT came out in late 2022. All right, and so in that year, they did $17 billion. And now in the latest year, ending November of 2024, they did $21.5 billion. So how can their business be dying when their money is going up rapidly? Yeah, you don't know? I don't know. But let's go ahead and look at the analyst ratings. All right, so here we go. 34 analysts covering the stock. It is a moderate buy now, and the current stock price is $365, while the mean target is $494. So analysts collectively see a ton of upside to this stock. And let's go ahead and look at the chart. All right, so now we're looking at the chart, and this is a 2-year chart because I want to show you guys that it hit almost $650 just in February of last year. All right, and because of all of this AI talk, and all this doom about how AI is going to destroy their business, they have sold off tremendously, obviously, with the stock price being where it is today. But now let's go ahead and zoom back in. And so we can see, looking at the Bollinger Band, that it is at the bottom of the Bollinger Band. Now, for this company, I definitely want to buy leaps. However, I'm waiting for the technicals to improve because I buy leaps based off of the stochastic. And so I go up here and I change this to a weekly candle. And looking at the weekly, I need for this stochastic to round up and start going back in an upward direction. And right now it's still obviously pointing downwards. And so I will be patient and I will just wait. And if you're in the Trader Freedom community, then I will of course alert you the second that I enter into that trade. However, since I'm waiting, I would rather get paid while I wait around for the stock price to turn around. And so let's go back to the daily candles, and we can see that the bottom of the Bollinger Band is at 360, while the current stock price is 365. And so now that we have that information, let's go look at the expected move. All right, so looking at the expected move, let's just use the exact same expiration date that we were going to use for Uber, which was the date that is 28 days out from now. And so we can see that the expected move is 4.96% either up or down. And then on the lower end, that would have us at about $346. All right, so the Bollinger Band says 360, and the expected move says a worst case scenario of 346. Now, with that information, let's head on back to Moomoo and look at a potential trade. All right, so here we are at the options chain for Adobe, and I will just come down here and select the August 15th date. So remember, we said we have support around 360, and then a worst case scenario of 343. And so I think I'm going to come up here to this delta of 345, and that'll get me right around the expected move. And we can see that the delta is a 0.19 delta. So I feel like I have at least an 80% probability that the stock price stays above 345 by this expiration date. And if I were to sell puts on this right now, I would receive anywhere between $305 to $320, and that is great for me. However, if you have a smaller account and you absolutely could not handle buying 100 shares of a $345 stock, because that would be $34,500 that you would need per contract, then you could absolutely just come over here and again, just turn it into a credit spread. And so we can go ahead and sell to open the $345 strike. And then you can just come over here and buy to open either the 340 or the 335. And in this case, I'm going to do the 335. So I'll go ahead and click this, and we can see that I have my credit spread set. And up here, I can see that my max profit will be $143 for placing this trade. And worst case scenario, if this trade were to go absolutely against me and the stock price went below not only 345, but also 335, then I would lose about $857. That would be our max loss. And because that's our max loss, that is the amount that we would need in order to put on this trade per contract. Now, first things first, this is a very high probability trade. But if the trade were to go against us, we would never want to just accept the loss. And so typically when I use credit spreads, then I would just set a stop loss somewhere around 3 to 4 times the premium received. But that's it for this video. Please let me know how you plan on approaching both Uber and Adobe, and if you like the stocks at all. And make sure you get your up to 60 free stocks for clicking the link below for Moomoo and opening an account and funding it. And also, we would love to have you in the Trader Freedom community. But that's it for this video. I have some amazing videos coming up for you guys shortly. But until then, I'll see you next time. Peace!